Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's take a moment to quickly recap the major events of the week just gone. It's worth pointing out that I'm recording this video on Friday morning in advance of Jerome Powell's all-important speech at the Jackson Hole Symposium. Taking a look at the US30, we can see the market came out of selling pressure during the week in advance of the Jackson Hole Symposium, which began yesterday, and as I mentioned, Jerome Powell, the head of the Fed, is speaking later on today. There was speculation that the Federal Reserve might look to do another large interest rate hike next month, and in turn we saw a move to the downside in the US30. Why is this important? Well, looking ahead to next week, on Friday we have the all-important US non-farm payrolls report, and that could inject volatility into the markets. Keep in mind, last month's jobs report was very impressive. The headline number was 528,000, well above expectations, and the unemployment rate fell to 3.5%, its lowest level in 2 years. So look at the price action of the US30. We can see here the market has come out of selling pressure this week. It's had a small bit of a rebound, but it's still holding below these two simple moving averages. And while it continues to hold below these two simple moving averages, it's likely the more medium-term bearish trend will continue. Further losses from here could see a target 32,844, and a break below that could see a target 32,760. Looking at the price action in the past couple of days, we can see the market's been rebounding somewhat. Looking at the MACD indicator, we can see momentum is firmly in positive territory, implying the bulls are in control. If we do see a continuation of the short-term upward move in the US30, it might encounter resistance at 33,446. And a break beyond that could see a target 33,590. As I mentioned, the US non-farm payrolls report will be posted on Friday. That's likely to inject volatility into the markets. What's also been posted from the US next week on Thursday is the ISM manufacturing update. These two updates could see an increase in volatility in US stocks and in turn the US30, but they could also increase volatility in the US dollar. Turning our attention to AUDUSD, we can see that the currency pair came under selling pressure in the last few days. In fact, it fell to a level last seen in July, and this was largely down to a sharp upward move seen in the US dollar. As I mentioned, we saw a decline in US stocks and a rally in the US dollar in advance of the Jackson Hole Symposium, which began yesterday, and once again, Jerome Powell of the Fed is speaking later on today. Looking at the AUD/USD, what could impact volatility in this currency pair next week is on Thursday, the Caixin survey of Chinese manufacturing will be announced. The Australian economy is tied in with China, as Australia exports a lot of metals to China, and what's going on with the Chinese manufacturing sector could be an indication of how strong or how weak demand for minerals from Australia will be. So keep an eye out for the Chinese manufacturing numbers coming out on Thursday. Looking at the price action on AUD/USD, we can see it fell to its lowest level since July, only a few days ago. We have seen a bit of a rebound. We're holding above these two simple moving averages, and while we continue to hold above these two simple moving averages, it's likely that the short-term upward trend will continue. A further rally from here could see a target 0.7024. and a break beyond that could see a target 0.7054. Even though the short-term trend for the currency pair is higher, it's worth noting the longer-term trend for AUD/USD is lower. If AUD/USD fails to break above this zone here at 0.7024, that could be an indication that the more longer-term bearish trend is still in effect. If looking at the MACD indicator, we can see there's a drop-off in positive momentum, implying the bulls are no longer as influential as they once were. If you do see a move to the downside in AUD/USD from here, support might be found at 0.6917, and break below that could see a target 0.6878. So just to recap, on Thursday next week, we have the US ISM manufacturing, and we also have the Caixin survey of Chinese manufacturing, and on Friday we have the US non-farm payrolls report. Thank you very much.